We talked about how banks recognize that when cash moved from their accounts into a life insurance policy, they got superpowers, and those dollars were able to get all kinds of really unique advantages. So, what is it about life insurance that gives it those advantages? What are the components? Well, first off, let's kind of talk about what insurance is as a whole, just to clarify that. And then we'll show you how life insurance specifically allows for these things to happen. So most of us know that in its simplest form, any kind of insurance is simply a hedge against any kind of risk. So if we get auto insurance, homeowners insurance, pet insurance, anything for our business, you are simply insuring an asset against risk, something happening to it. And in turn, all we do is we pay a premium or a bill. And what does the insurance company do? They in turn give us coverage, right? So we pay a bill, they are indemnified to provide us coverage if something were to happen. Now, that coverage, that bill that we pay, it is purely an expense. There's no rollover, there's no accumulation, it's purely an expense, right? So if I were to pay into an auto policy $500 a month for 10 years and I never filed a claim, never got in an accident, it's not like those premiums that I paid in are going to accumulate if I don't use them. They purely go right to the insurance company and it's just an expense. Well, luckily in life insurance, it functions a little bit differently. So the asset that you're actually insuring in something like a life insurance contract is your life or whoever you're taking the policy out on. And whoever that person is, they have inherent value, both emotionally and economically. They contribute, they make money, and therefore it affects the economy. So if that person were no longer in the picture, there would be a financial impact to their family, to their business, or to the economy as a whole. And because of that, that earned interest or that earned income that they would make is something that is insurable, that contribution. So the coverage component is what's called a death benefit. So if someone were to pass away that had a life insurance contract in place, there would be a one-time tax-free lump sum payout made to their beneficiary or the person or people that they choose to receive that payout. Could be their spouse, a business partner, or their children. And it is simply a one-time sort of coverage payment that gets made by the insurance company to cover that beneficiary, to cover that impact where that person would have been, their contribution. Well, though really great to be able to have death benefit coverage for our spouse, our business partner, our children when we're not here, but that doesn't really do much for us now while we're living. So we want some living benefits as well, right? So we don't want to just fund into this giant expense and then never get anything out of it while we're living. So unlike traditional insurance, life insurance is very flexible and it actually has an accumulation or rollover component to it. So like you pay a bill for your other types of insurance, same idea, you're going to pay a premium each and every month, but instead you can actually choose and split up where the dollars go when they enter into the policy. So a portion of it automatically has to go to the expense, which covers the death benefit, which is the real insurance element there. If you were to pass away, the death benefit will be there to cover whoever you want to be your beneficiaries. So if I had, let's say, a $2,000 premium, I can actually dictate how much goes to the expense based on how I set up the policy and how much goes into the accumulation side. So think of it in the way that what if you were to go back to that car insurance example? You paid $500 a month into your plan for 10 years and you never touched a dollar of it. You never filed a claim. There's never a case out on you. You don't get any of that money that you've paid in. But in life insurance, you do. You can actually fund into your premium. A portion covers your butt and covers the expense if something happens. And then the remaining portion actually goes into cash value. It starts to accumulate or roll over because you aren't using it. And so what the banks and corporations and wealthy people recognized is, again, once the money made its way from dollars that we had into this cash value, that's when they got the superpowers. That's when they got safety. That's when they got liquidity. That's when the insurance company was able to return 4 to 6% back to the policyholder. This is exactly what banks and corporations do. They take their cash, they realize it's not doing them any good into a bank, so they store it in life insurance contracts because you get all of those superpowers. So they realize there's an expense that they incur that goes to the death benefit coverage, but all the accumulation, all that, in this case, the $1,800, that is what gets, and every payment that gets made starts to accumulate and gets all the advantages of liquidity, safety, and that guaranteed growth, plus no market exposure. If the stock market tanks or the real estate market goes berserk, they are protected. And so it's a great place to warehouse cash. So the wealthy, big corporations, we're talking back 150 plus years, they recognized that this was possible for them to fund in that cash value. And they decided, how can I put as much cash as humanly possible, like the banks do, so I can beef up that cash value and get all those superpowers to play in. So in the next videos, I'm going to show you some of the mechanics on how these policies actually work. But that's the roundabout way of saying how we build these as cash storage policies or warehouses for our cash, right? Because if our cash has to sit somewhere, it can sit in a bank account, it can sit in one of those stock market accounts that's very exposed. Or if we think like a banker, if we think like the wealthy, we want to store it in the most advantageous place possible. And in this case, it's the policy where I know that that cash value is going to get superpowers once it crosses over into that account.